Good morning and welcome to 3 Minutes on Markets and Money. I'm your host, Lance Roberts. You know, this market is a lot like my wife asking me if she has any annoying habits, and then she gets upset with a PowerPoint presentation. Stick around to the end of the video. I've got a special offer for you this morning. This is the whole issue with the markets, is that despite the fact that this market is doing very well, if you really say anything bad about it, you're considered bearish, and that you shouldn't be paying attention to those type of people. Look, here's the problem with the markets currently. They are very extended above long-term means, and that doesn't necessarily mean that you've got to have a big correction. But I want to go through the various major markets this morning because there is a very big dichotomy between what's happening in the main indexes versus what's happening in the non-main indexes. So if we take a look at the S&P, very bullish trend at this moment, currently on a buy signal. Absolutely nothing wrong with the S&P at this point as we go through earnings season. The NASDAQ composite, of course, that's where the major technology companies are, bouncing off the 20-day moving average here yesterday. Big rally, and at the end of the day yesterday, up on a buy signal here. Money flows are positive. Nothing wrong there as well. But again, when you just look at these two indexes, it seems to be that the market is absolutely healthy and doing just fine. However, when you start to look at the underlying indexes, particularly small and mid-cap stocks in general, not so good of a picture here. 20-day below the 50-day moving average, did bounce off support at the 200. But again, a buy signal that is not giving you much in terms of those small mid-cap stocks. Moving into international markets, you see much the same picture here. Despite the fact that you've got a rally going on in the S&P and the NASDAQ, absolutely nothing going on in the international markets after collapsing through the 200-day moving average. Emerging market stocks absolutely getting decimated here. Getting into international stocks. These are the industrialized international companies. Again, nothing really going on here. Lots of money flows, nothing really happening in terms of price, staying below the 50-day moving average as well. So again, when we start looking across the breadth of the markets, outside of just the S&P and the NASDAQ, really a lot of companies not doing all that well. In other words, the breadth of this advance has become much more narrow at this point in the rally. This brings us back to looking at interest rates in particular, which continue to really rise here. Again, suggesting we've got weaker economic growth in the pipeline, have likely seen the peak in earnings growth through this season. And even the dollar has been really kind of gaining more strength here as have really kind of come off this double bottom in the dollar. Lots of strength in this advance. Currently, just a little bit of weakness here that's been helping support a little bit of the commodity play momentarily. But again, this trend in the dollar appears that it wants to at least move higher here, and that would correspond also with kind of a risk-off trade potentially as money moves back into treasuries. Now, as we talked about before, when money flows come in from international countries, right, China, etc., watch what's happening in China right now. If money starts to leave China, and if China tries to devalue the yuan, as an example, that's really going to push money back into treasuries and the U.S. dollar, because in order for me to get money out of the yuan into the U.S. dollar, I have to buy treasuries to convert those yuan into dollars. That's going to provide a lift to both of these. Stronger dollars, not good for commodities, not good for oil, not good for energy. Below the surface, there's a lot of annoying traits to this overall market that certainly leaves us a little bit concerned about the major indexes themselves at these levels. So again, it doesn't mean that you should be out of the market at this moment. Markets are doing fine, but it's only really working in the major mega cap stock names, particularly in the S&P 500 and the NASDAQ. Now, we go through a lot of this stuff every day on our subscriber site, riapro.net. So if you go there today and want to check it out, I'll give you a 30-day free trial simply for signing up. Try it out for 30 days. You'll get all of our daily market commentary as well as our portfolio trading that we do there. Of course, full research capability to research your own stocks. And very shortly, we'll actually be adding these money flow sell signals to the website there as well. But I'll give you a 30-day free trial for checking out riapro.net. We'll see you tomorrow.